This is Kerry Artak with Wicked Signal, and today's video analysis, recorded Thursday, December 17th, 2020, is on Advanced Micro Devices, or symbol AMD. Everyone knows about AMD, who trades the market. It's been around for a long time. I didn't realize early 70s. The monthly chart that you can see here goes back to. This is, an American multinational semiconductor company based in Santa Clara, California. They develop computer processors and related technologies for business and consumer markets. I just trust that you know about AMD. You can always research the fundamentals, but what here I'm going to show you is a technical buy signal, actually, that is just playing out this week. Now, this market has been on a tear for a long time, for several years, and that's been relatively uninterrupted. Higher highs, higher lows, some pauses, some consolidations along the way. This is nothing new. It's just that, this market has been in a consolidative framework really since early August. We've been in a range-bound market, and now it looks to me as if we're going to resume trend here in the coming weeks and possibly several months. And I'm looking for gains from present price levels of roughly 20% or more, and that will be sort of assumed. That is the buy signal if we, close today above a key area in the $96 area. I'm sorry, $94 area. I will show you all this in a moment. But first, let me tell you about Wicked Signal. WickedSignal.com. Please have your trader and investor friends go to it. Fill out the free subscription link. Fill out their first name, last name, email address, and they or you will receive an email every time a new video analysis is presented or ready to view. And I'm doing several a week at this point in time. By later January, February, my aim is to do a daily, analysis video. I won't fill your inbox with sales pitches, and I will not share your personal information with anyone outside of the organization. So let's take a look at Advanced Micro Devices and the buy signal that I'm talking about. First, let's take a look at the extremes on this monthly chart that goes back to the 1970s. And I just have two extreme points: the 2000 high, or the NASDAQ bubble high of 48.50 a share, and the lowest we traded was in 2015 at 161, or the lowest, I should say, in the last 20 years. Prior to that, in 2008, I think it was a 165 low. So there was essentially a double bottom, from 08 to 15, 7 years apart. And we've really been up since then. I mean, not continuously. There's been quiet consolidative time frames in between, but this has been a pretty aggressive rally, especially the last year or so. I'm going to open, well, actually, here's one thing I'm going to show you. And that is just, you'll see on some of my videos, I talk about these full wave counts, full swings. And this is an example, and this is a long-term one, of course. It's the 48.50 high, subtracting the low from 2015 at 161, and you just flip that upward once you push through that 48.50 high, and that takes you to 95.39. That is a level that we actually violated this week, or this month, I should say, for the first time. I forget that this is actually a monthly bar chart. So very recently, we met that objective. I wasn't analyzing this at the time. I'm just showing you that is the full swing. And it looks to me as if this market's going to continue on up. I'm going to actually open this into a weekly chart, as you can see here. And then I'm going to grab this section and open that up into the weekly chart. And I'm actually going to grab even some more to keep opening this up. I'm going to grab that section. And here we are with just sort of an empty weekly chart. And this is the formation that I'm speaking about. It's nothing more than a horizontal channel top that we are now above for the first time this week. You can see a couple of weeks ago we pushed through it, backed off, we closed right at it. The market fell back the following week, which was last week, and this week we're back at it and actually above it. And so this is Thursday. It looks to be a safe bet that we're going to close above this formation tomorrow, Friday, but that is just a bet. The market could sell off tomorrow. And if it closes Friday, December 18th, 24 hours from now, roughly, back below the 94.06 formation, then there's no buy signal. Well, let me back up just a little bit. You can see here the channel structure that we did settle above a few weeks ago. And you could look back, in hindsight and say, well, that was the buy signal above 88.58. And I was watching this at the time, and I thought about putting out a video, and I generally like to err on the side of caution, and I thought, let's wait for the full buy signal above the 94.01 formation, which is what we're getting now. So, to the point that I was making just a moment ago, if we close Friday back below 94.01, then yeah, the 88.50s are likely over the next week or two. And there's a couple of ways for me to express this. One is, if we close below 94.01, you could take a stab in the 88.50s as support, but I really don't see any aggressive upside follow-through unless we settle the week above 94.01. And if we do settle above 94.01 and you do buy this stock, I don't know what your risk parameters are, your risk management rules are. But I don't see this market looking weak unless we were closed below 88.58, or in other words, wherever that formation is over the next 4 weeks. And once again, by the way, I'm giving you 4 weeks apart. You can subtract 88.52 from 88.58 and divide by 4. That'll be about 1.5 a week. And that gives you the exact location of these structures into the second week of January, or Monday, January 11th. But I don't see any indication that this stock is likely to continue easing south into January and February unless it closes below 88.58. And inversely, assuming we do close Friday, December 18th, above this 94.06 level. Is that right? Bear with me here. I'm sorry. Yeah, 94.06. And that is the week of Monday, December 14th. If we close above 94.06, and you might throw in the 1% violation on that, which would be 94 cents higher roughly. Yeah, $95 or higher. I'm going to include that in this video here. I didn't in the chart. But a settlement of 95 or higher on Friday, December 18th, a 1% push beyond that 94.06 formation is a clear buy signal into January trade and February. And I would expect over the next this could be 2 to 3 months. This is a weekly chart, remember. It could be 3 to 5 weeks if this market just rallies significantly. I mean, we saw that last summer in July as we came into early August. You can see 3 or 4 significant bars in a row to the upside before we settled into this consolidative framework. So that could happen again. That is possible. Or it could take every bit of 2 or 3 months. But you can see the target here. Presently 115.39, and by the second week of January, the week of Monday, January 11th, it's at 121.02, and I think it's around 115 even right now, where we have roughly a 20% gain from present price levels. There's also the full swing up there once again, that A minus B plus A, what was it, the September high against the October, November low, A, B. You add that to A, and you've got 114.81. So there's a lot going on up there, and I think this is a realistic targeted area, assuming we settle Friday, December 18th, above 94.06 by a 1% margin. Now, you can get into this trade earlier, as I've been saying in recent videos. I'm putting out weekly charts because it's easier for me to give you these numbers over time. I can give you the 4 weeks. Doing that on a daily chart is just tough. And so what I'm saying here is any daily settlement 06 by at least a 1% margin is in itself a buy signal. It's just that I like to see the market settle the week out above these important levels as well. It has finality, it has closure, and it's a buy signal. And there's really no two ways to see that. So there's really not much else to say here. I'm going to say it again, probably for the 5th time, that if we settle Friday, December 18th, above 94.06 in AMD, and by at least a 1% margin, which takes us really to 95 even, then this market should continue into the 120s over the next several months. And that is really all that needs to be said about this particular wicked signal video on advanced micro devices.